Hello, and welcome to myfinanceteacher.org. In this video, we're going to have a look at the long-term valuation of gold miners. Remember, this is a long-term valuation, and the actual day-to-day share price might actually vary quite a lot. Based on the valuation factors that we are looking at, this valuation generally would work over a long-term horizon of several years. And here are the factors we look at. We look at the gold price, including three scenarios: conservative, balanced, and optimistic. More details on gold price in a minute. We look at how much gold and silver the miners have in the ground. Here in our conservative and balanced valuation, we only include proven and probable reserves. And we don't include measured and indicated resources, meaning that our conservative and balanced valuations lean more towards the conservative side. For the optimistic valuation, we include proven and probable reserves and only half of measured and indicated resources. And even for the optimistic valuation, we don't include any of the inferred resources. So again, even our optimistic valuation isn't really crazily over-optimistic. It still tries to stay somewhat conservative. For the production costs, I'm looking at all-in sustaining costs. If all-in sustaining costs per ounce of silver are not available from company reports, then I use a gold-silver price ratio as some sort of estimation. We look at the company's long-term debts from Yahoo Finance and subtract these debts from the valuation. Valuation per share, of course, would look at the total number of shares outstanding. And here we also look at insider shares. And the reason we look at them is that insiders might turn out to be stronger hand holders, possibly supporting the share price. Extracting the reserves out of the ground will take years, so we need to take into account the time value of money. And we do that by applying a discount rate to some sort of average of a mine life. We'll look at the time it would take to extract only proven and probable reserves. By the way, today is 12th of October, and today this valuation will be released to the members at myfinanceteacher.org. I will also publish this valuation publicly on YouTube after 1 or 2 weeks, by which time I think the share price of the miners will increase. So if you'd like to get more detailed and more regular updates on a range of assets, join us at myfinanceteacher.org. You can do that by clicking this register button on the home page. If you scroll down the home page, you will see that I and my colleague, we do update the members pretty frequently. So today, on the 12th of October, I'm looking at these three scenarios for gold price. In the balanced scenario, I'm going to use a gold price of $1,886, which is now 2% below the ongoing spot price. So again, even in the balanced scenario, we are leaning a little bit towards conservative. In the conservative valuation, I'm going to reduce the balance price by another 10%, giving me $1,697. And in the optimistic valuation, I'm going to increase the balance price by 10%, giving me only $2,074. Whether you think this would be an average gold price over the next 3 to 4 years, that is questionable. I think there is a good chance for gold price to go substantially higher. So again, as you see, even our optimistic scenario is not crazily optimistic. And today in this video, we'll actually have a look at 4 gold miners. So this is more of a 4-in-1 deal for you. Before we continue, let me remind you guys to subscribe to the channel if you haven't, and click that bell notification. Thanks a lot. The common thing about these 4 gold miners is they're all somewhat of a similar market capitalization of around $2 billion. And the gold miners that we're going to have a look at today is Pretium Resources, Eldorado Gold, IAG Gold, and Coeur Mining. So those are PVG, EGO, IAG, and CDE. Now going through the valuation factors, we're going to start with proven and probable reserves in thousands of ounces, which is 4,200 for PVG, over 8,300 for EGO, over 16 million ounces for IAG, and 2.4 million ounces for CDE. If you look at the company reports, you might not actually see these numbers. So what I did here is that I took the reported values at the end of Q2 2020 and subtracted the amount of gold that companies produced in the first half of 2020. The reason I do that is in most cases the proven and probable reserves reported in Q2 are actually the same numbers as those reported in December 2019. One exception here is PVG. I just took the reported number here because the last update of the reserves for them was in March this year rather than December last year. So looking at this chart, we see that IAG has pretty good reserves which actually exceed proven and probable reserves of all of the other three miners. Next, we'll look at measured and indicated resources. But remember, we don't count these resources in both conservative and balanced valuations. We only include half of these numbers here for the optimistic valuation. And here we see that Eldorado Gold and IAG have equally large resources compared to PVG and CDE. Next, looking at all-in sustaining costs. The costs are somewhat higher for IAG at $1,230 per ounce versus the other three miners which have all-in sustaining costs of just in the middle of 900s. Next, looking at long-term debt. CDE has the lowest debt at below 300 million and the other three miners' debts are somewhat close to 400 million. Looking at the number of shares outstanding, again, IAG has the greatest number of shares at about 471 million shares, while the other miners hover somewhere around 200 million shares. We also look at the amount of shares held by insiders in percentages as reported by Yahoo Finance. And the highest values here are for PVG at 1.66% and CDE at 1.45%. Just over 0.5% of IAG's shares are held by insiders and 0.2% for Eldorado. Looking at time value of money, I use the discount rate of 5% and apply this discount rate to the amount of time it will take to extract proven and probable reserves based on the ongoing annual gold production. The longest mine life here would be IAG with 25 years. Next, with all of the factors mentioned above, let's have a look at our evaluations. Looking at conservative valuation first, which remember only includes the gold price of $1,697. Will that be the average gold price over the next several years? That is for you to think about. And this conservative valuation only looks at proven and probable reserves of gold and silver. Here we don't include any of the measured and indicated resources. What we see here is that if gold price averages just below 1,700 over the next several years, the valuation for PVG would be $12.08, which is actually a little bit below the ongoing market price of $13.50. That's the closing price on Friday. Eldorado is actually pretty interesting with its conservative valuation of $32.05, which is more than double of the ongoing market price of only $12.41. So this is a very interesting case here, and thank you for suggesting to look at the Eldorado Gold. Next, IAG is also very interesting. In one of my older videos, I actually looked at possible reasons why IAG is so undervalued, meaning that the market price is pretty low, even compared to a conservative valuation. Conservative valuation gives us $12.02, which is nearly triple the market price of $4.08. And CDE valuation in our conservative scenario is slightly over the market price. The valuation is $9.52 versus the market price of $8.20. Next, looking at the balanced scenario, where we still only include proven and probable reserves of gold and silver in the ground, if the company has silver, and the gold price of $1,886. Again, whether this will be the average gold price over the next several years, that's for you to think about. And PVG valuation would be $15.52, which is just above the ongoing market price of $13.50. The balanced valuation for Eldorado is $40.24. Pretty good versus the going market price of $12.41. The balanced valuation for IAG, $17.15 versus the market price of only $4.08. So both Eldorado and IAG are pretty interesting here. And next, balanced valuation of CDE is $12.20, pretty good versus the ongoing market price of $8.02. One thing I want to mention here is, again, remember we're only looking at a limited range of valuation factors. There are a lot of things we are not considering. For example, market overreactions, the jurisdiction, meaning the risks associated with the companies where the mines are actually located, maybe some other company-related news and anything like that. So take these valuations with a grain of salt. These valuations taken with a grain of salt would probably only apply to a longer term outlook. And in that long term, if some of the optimistic valuations play out, I'll probably have to celebrate somewhere on the beach. And finally, let's have a look at our optimistic valuation, where we include the average gold price of $2,074, 2074, and where we include our proven and probable reserves and only half of measured and indicated resources of gold and silver in the ground, if the company has silver. So with that in mind, our optimistic valuation for PVG is $29.66, which is over double the ongoing market price of $13.50. Optimistic valuation for Eldorado is over $100, and it's towering above the ongoing market price of $12.41. Optimistic valuation for IAG is over $34, which is also towering above the ongoing market price of $4.08. And the optimistic valuation for CDE is $22.32, which looks really good versus the market price of $8.20. Is this likely to play out over the next few years? Is gold price likely to average around $2,100 over the next several years? I think there is a good chance for that. But who knows the future? Nobody knows the future. The fundamentals for precious metals are outstanding right now. But in either case, I really want to know your opinion, so let me know what do you think in the comments. Again, this valuation will first be posted for the members at myfinancesteacher.org. If you want to join us, click this register button on the home page. If you are watching this video on YouTube 1 or 2 weeks later, I would appreciate it if you hit that like button and subscribe to the channel. I would ask you to do it right now before we go on to the highlights of some other interesting factors related to these 4 gold miners. So, the highlights. For PVG, a highlight I noticed from looking at the company reports is that it seems to have very nice exploration potential, and it seems to have quite a large land package. Beyond that, the amount of cash that the company has is also very comforting at over $124 million. For EGO, what was interesting for me in the company's reports is that the company also produces copper, lead, and zinc besides the precious metals. So if the economy does well in the future, even if precious metals don't shine as much as we might expect, EGO might still do relatively well. And another highlight is a technical study on the maximum possible production from the ongoing Lamaque project is expected by the end of 2020. Lamaque is already producing gold at the moment. The production is expected to grow, and this technical study will be interesting to look at by the end of this year. Of course, just like the other miners we look at, EGO also has some other exploration potential from some other ongoing non-producing projects. When looking at IAG reports, a couple of things that stood out for me is the amount of cash that they have at over $800 million, which compares really nice to their market cap of close to $2 billion. Remember, all of these miners have a relatively similar market cap of around $2 billion. And another interesting highlight I noticed from the company reports is that ongoing construction at their Coeur project in Canada, with potentially 5 million ounces in reserves. And looking at CDE's reports, a couple of things that stood out to me is another technical study coming up on the Rochester project, which will look at exploration results as well as some of the preparation for construction possibly in early 2021. And this technical study is expected by the end of this year. So that will also be interesting to have a look at. That is all for now. I hope you had a nice weekend. I wish you a wonderful day and good luck in your trades.